Let's take a look at some information and charts on Decred for Brave New Coin. So the biggest unlock of technology for Decred lately since October 2020 has been a decentralized exchange that I tried to get some visibility on, and I can't really find too much information about it other than downloading the actual client and opening it, which I'm not going to do because my computer was freaking out trying to download the file. But so that is in the back of my mind regarding these statistics, this information. For me, it's super basic. Is it proof of work? Is it proof of stake? This is both. They have a treasury. They have a DEX. What is the inflation or issuance? Are people using the DEX? Are people using the governance component? Are institutions looking into DCR? To some loose degree, yes. Have they arrived yet, or are they arriving? Maybe. I mean, there's some Kathy Wood quotes about Decred, but this is really what it comes down to for me for Decred. When I'm looking for information on Decred, there's kind of like a select few of people who are cultish, but in not a negative connotation around Decred. So it's hard for me to get like straight shooter information about Decred. So I just have to go to the statistics. It's an older coin. It's been working for a while. It's probably one of the best examples of a hybrid proof of work, proof of stake network. Dash being a direct competitor really to Decred, whether the Dash or Decred people want to think of it that way. It is. They're both very, very similar. This website has a nice, DCRstats.com has a nice breakdown of total supply, pre-mine. They're honest with all that stuff. So when you're researching something like this, it's important to get all your facts, right? Proposals in Polyatia, their governance system, censorship-resistant, blockchain-anchored public proposal system. So anybody can submit proposals, and then it gets voted on yay or nay. So I like that there's a treasury. I like that the developers get paid. I like that the developers aren't influenced by outside forces because they're paid from the coin itself. I like that about the coin. You can say the same about Zcash to some degree. I think DCR does it a little better in that they thread that needle where they take, I think it's 10% of the block reward, right? Dev subsidy right here. They take 10%, and to me, that's probably enough to reward the devs or pay the devs for their work. When we're looking at, again, the DEX, you can download this if you really want to and look at all of the details. Really what I wanted to see was the volumes. They have atomic swaps, and the big thing about this is a browser DEX, like any AMM, Uniswap, Sushi, stuff like that, is probably less secure than the client, but having a client and a download and all this stuff, it adds a layer of friction. It's low friction, but it's a friction layer where I can't just connect a wallet and off I go, right? It's not as easy as Sushi and Uni and all these other places on ETH that make it easy to connect, right? And there's interoperability, all that is there. So I couldn't find a website client type deal. Maybe there is one for this on some stats or something. I just couldn't find it. So if the DCR people are listening and that's out there, let me know. If they don't have something like that, I would definitely look into creating metrics like that for people to look at. If we look at the DEX GitHub, they go through and they say what it is, no trading fees, it's atomic swaps, it's on chain. The tech is cool and refreshing, but it's just important to see the information and stats behind it. I also think people are maybe conflating, is the term, between like the success of the DEX and the performance in the coin since January. I mean, if you were a warm body listed in January or before, you're doing well. It's hard to point to any coin since January that isn't doing well. So it's important, especially for the DCR maxis, to keep this in mind, that just because the coin's doing well when everything else is doing well doesn't mean the coin will do well when everything else doesn't do well. There's high correlations in crypto. I think that's obvious. Now, DCR has certainly outperformed much of the market, but it's important to keep that in mind. Looking at some of the staking information according to stakingrewards.com, one of the sites I use for all the staking coins, the information I look for, looks like they have 60% total participating in proof of stake, 60% of the circulating supply, and it looks like the adjusted reward after inflation is around 2%. So if you compare this again to any of the other AMM type stuff, that is a low reward, right? Unless you are deep down the DCR rabbit hole, most people aren't even going to consider this because it's such a low percentage. And we can have a conversation about AMM interest versus POS, proof of stake interest. Sure. But I think for most people, they're going to see this and say, okay, I can get 200% on PancakeSwap, right? Why would I bother putting any money into cred at 2%? That's the type of like base low level analysis I think a lot of people currently in the market are looking at. If they're looking at this versus PancakeSwap, which they're probably not even looking at the cred as much because that interoperability just really isn't there. If we look at the hash rates for the network, if this were just proof of work, to see 3 pools with basically the entire chain would be a major problem for centralization. But because this is hybrid proof of work, proof of stake, it's much harder to 51% attack the chain, even if you have a majority of the hash rate. So keep that in mind. Hash rate has been volatile, but at the same time hasn't really moved in any extremes one way or the other over the past year. It's kind of flat. Difficulty has also essentially been flat. It's kind of had several dips, but overall it's been a smooth ride for the miners. If we look at some of the ASICs available for the cred algorithm, like 256R14, they are all mostly in profit. No new miners in the past couple of years on the ASIC front, so I don't think they are at risk of any ASIC takeover or anything like that. Again, it would be harder anyway because it's hybrid proof of work, proof of stake, but just another part of the conversation. Because it's not just proof of stake and not just proof of work, you have to look at all this stuff together, including, is mining profitable, right? What is hash rate? What is difficulty? What is the percent being staked? What is the inflation? What is the issuance? If you look at the transaction counts since October, transaction counts exploding. No big surprise there. Extremely volatile all over the place. You kind of have to zoom way out with the averages to get a true picture of what's going on here. It's still up and to the right, so it's hard to be bearish purely based on that. If we look at average transaction values, which largely match price anyway, but those absolutely exploding, it's pretty clear that the cred did a bunch of nothing for many, many years, and then all of a sudden in January, right, it's suddenly doing stuff, right? Transactions per day still not at all-time highs, but very close to all-time highs. And I think it's just important, again, to just look at Decred in the broader scheme of things, especially if you're deep in the Decred community. Anybody who's deep in a community thinks their coin is, why isn't my coin priced higher, right? So yes, all these metrics look bullish. Having any sort of new technology is bullish, like the DEX situation. I'm just concerned about the long-term health of this when stuff goes sour. When the eventual bear market comes, right? Where's this stuff going to lay relative to everything else? Active addresses all-time high, NVT all-time low. I mean, you just can't be bearish on something like that. Since 2019, active addresses have continued to increase mid-2019, and NVT is an inverse metric of economic utility, so more on-chain activity will bring NVT lower, and it will look bullish. It's probably not enough time. We had basically 3 years of pre-DEX DCR. We're probably going to need 3 years post-DEX DCR to get a new read on NVT because the chain itself and what's happening on the chain is so different. But even still, you can't look at this and not be bullish in a vacuum. MVRV, another inverse metric of economic utility, suggests that relative to backtesting, if we compare this to price, these were the previous USD highs in price, and the MVRV in the line here. MVRV is market cap versus realized cap, or how much is moving on chain. So it matches the 2017 highs, MVRV does. So it's definitely saying be careful up here relative to how overbought it was in 2018. In 2017, MVRV got to 3.35, but this may be the new normal for this particular metric. I mean, it's so hard, just like all these coins that are adding new stuff to the chain. It's hard to really know how to evaluate what's going on in the near term because my data analysis is only as good as my data. And if my data is Apple's pre-2020 and rocket chips post-2020, it's hard to know what to compare. One thing you can look at, though, is Google Trends, which remain muted even with price exploding. And I'm pretty sure Decred isn't a word outside of crypto. Maybe, even on looking at this a different way, still looks not ready to moved to all-time highs yet. So this gives me some hope that price isn't going to roll over, that price hasn't topped. Lots of mixed, unsure signals on fundamentals, but that's not saying anything they've done is bad. It's just I don't know how to evaluate it compared to where it's been, right? If we look at technicals, though, in a vacuum, anything that's up 2,000% in the past few months gives me some pause as far as, is that really a buy up here, right? Like if you've missed this train, how do you trade this? Do you just dollar cost average? Do you just FOMO in? Or do you wait until it mean reverts? Do you have bids at 110, which is the 200-day moving average? Basically a 50% drawdown, right? You could miss the entire bull market before this actually retests the 200-day moving average. And at the end of the day, that might be okay, because really, what's the risk reward here? You're risking a 50% drawdown versus upside of, I don't know, right? Maybe this is just a giant repricing of Decred, which is what the Decred community members will tell you. But on technicals, this is just, it looks like every other thing that's been up 2,000% over the past few months, right? It's just difficult for me to want to get in that. Yeah, it's bullish. It looks fine. It doesn't look super overbought relative to RSI. There's really no volume support until sub 100. You could say a bullish divergence here. I was highlighting this because it's sort of a diagonal Wyckoff accumulation in retrospect. Really, all you need to know is the 15 to 200 crosses on the daily. They were super messy and then they weren't, right? And this lines up with the DEX stuff pretty nicely. So you got to think that played some part of this. Very much right place, right time for Decred to introduce that sort of thing going into January. On the 2-year, well, actually it's the 1-year MA multiplier. So this is the 1-year MA moving average in the green. The 2-year MA multiplier, 1-year MA multiplier, this is 5x. The red represents 5 times the green. And it gives you this range where price likes to live in general. You can see how oversold it was historically in 2018, 2019, 2020. All extremely good buy signals for where we are now, right? Now, you can't necessarily predict when we break up from sub backtested MA, right? But the idea is you're buying anything below some high time frame moving average, and then you're selling anything at or near or above the multiplier. So to me, this is saying we're just as oversold or overbought or about as overbought as we were on Decred basically in 2017. This will continue to move up slowly over time. This whole move was pretty violent, as in it happened over a few months. It went from basically the bottom to the top in a relatively short amount of time. But again, it's hard for me to want to buy this up here, right? Versus something that is below its moving averages. Even on a rotation trade, I think people looking at Decred are either convinced that like the herd is coming and it's going to go 5x from here, or they're saying, you know what, it's up 2,000% since November. I'm going to buy something else that maybe even has worse fundamentals like EOS, right? Or Ripple. Like it doesn't matter. It's just EOS has moved Decred has moved so much in the past few months. Here's that edge to edge on the cloud weekly. Again, like this is the trade I want to take. Above here, I get sort of nervous. It would be a good rebuy at 130. So between 110 and 130 to me is a solid rebuy. It's just a tough buy at 205 for me. 130 is the weekly Kijun level. On the daily cloud, though, the daily cloud looks fine since November. It's been above the Kijun basically the whole time. Definitely above the cloud. And the trend as a whole doesn't look at risk of anything. 2,000% be damned, it looks fine on the daily cloud. DCR-BTC, this is the 2-day, zoomed way out, so you can see that since 2018 to basically January, it was sell-off city relative to BTC. Since January, it's recovered some of those losses, but it's still not even 50% from the highs. So if I'm bullish DCR-BTC, I have to be looking at 0.01 or 0.09 as far as the target. 0.09 based on the 50% retracement from high to low. I like the daily 2-day Kijun as far as a level to watch for a bounce. The 400-day moving average, which is what this is, for a bounce as well. It's just a tough buy up here for me. Even though all the metrics look fine, just the technicals just look a little bit too overbought for me here. And then lastly, DCR versus Dash. DCR has gained quite a bit of momentum over Dash since October, November as well. It is basically sitting at all-time highs relative value against Dash. So that's all I have for Decred, but if you want to see me trade ETH and BTC in a non-custodial portfolio management tool, you can pop on over to enzyme.finance. You can see AUM, allocations, trades, deposits, withdrawals, who does what and when. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.